In times of turmoil, switch to stablecoins, they say. How important are stablecoins to the overall crypto market? Is Tether a placeholder for a US digital dollar? And how much transparency are we seeing from Tether today? Welcome to Word on the Block, the series that takes a deeper dive into blockchain and the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast.News. I'm Forkast Editor-in-Chief Angie Lau. Well, it's been about 3 months since crypto exchange Bitfinex and its sister firm Tether settled with the New York Attorney General for $18.5 million. Since then, the world's largest stablecoin, Tether's USDT, has exploded in growth, almost doubling in market cap and expanding to various blockchains, including the recently announced Avalanche. Bitfinex and Tether have taken some steps to provide transparency since the New York case closed, including a recently released report of its reserves. Now, some say Tether is the most important factor that could sway market sentiment. Tether reveals for the first time the reserve it has since settling with the New York Attorney General, revealing what Tether is really backed by. And it's not only the dollar. Bitfinex CTO Paolo Ardoino joins Forkast right now for his first on-camera interview since the release. And Paolo, welcome to the show. It's great to have you on.
Thank you very much, Angie, for having me today.
It's really an opportunity, I think, to answer very candidly, and we're going to give you the opportunity to do that. This is going to be a very candid and transparent conversation, so we appreciate it, and let's get things on the record. And starting from when Bitfinex was born here in Asia, as we've monitored and paid close attention to Bitfinex, very much part of the community, born in Hong Kong in 2012, and then registered offshore British Virgin Islands. But where is Bitfinex all based now?
So we decided to bring Bitfinex to be a decentralized company. So, Bitcoin is the reason why we are all here, right? Is what really started this industry, we can call that now. And we believe that going full decentralized as a company is a way to be true to Bitcoin itself. So Bitfinex started in 2012 with 2-3 people, right? So it was really, really tiny exchange, and it grew quite a lot, especially in the last few years. But we thought that maintaining this level of decentralization, basically not having offices, and it would allow us to promote diversity in the company, to promote cultural inclusion, and also allows us to grow better. And of course, since we are a global business, to cover better the 24 hours. So, when we took this decision, it was many years ago. And in a world where the pandemic makes lockdowns unpredictable, now it turned out to be the right choice. We are seeing many other companies that are following our steps now. And I can say that although a few of our guys and girls that work with us have been affected personally, the overall ability of the company to handle the situation was quite good, given our history of being fully decentralized.
Decentralized is one thing for a decentralized workforce, and you're absolutely right. We are all that these days. But when you are a market cap exchange of $60 billion, for those wondering where jurisdictionally Bitfinex lies and on a regulatory kind of a framework, why British Virgin Islands?
So British Virgin Islands is is just a place that have the right amount of regulations, that have good bankings, doesn't have tier one banks, of course, but has banks big enough to support the growth of Bitfinex and Tether, right? So especially you have to think about the fact that we moved there when we didn't have 60 billion under management. So of course, things are growing. We are opening more bank accounts. We are opening more relationship with the banks across the world, of course, now. But when we moved there, we were smaller, both as an exchange, and the stable coin.
Do you think that will ever change? I mean, as we've seen the industry grow, you know, a lot of jurisdictions like BVI, like Caymans, like Seychelles, all of that, Malta, you know, Gibraltar, these kind of smaller jurisdictions provided some sort of regulatory framework. Increasingly, we're seeing, you know, people going back to gold standard. You know, here in Asia, Hong Kong, Singapore, obviously in Europe, potentially it could be Switzerland where you are. And then, of course, in the US, where, you know, why not any of these jurisdictions? Do you think there would be a point at some point in your future for Bitfinex and Tether that you would move jurisdictions to a high, you know, what is perceived as a more international, higher standard of regulatory compliance and framework?
Well, I think yes and no, right? So we are, as a companies, we are seeing and that there is an increased level of regulations that are being proposed by different countries across the world. And first of all, we welcome those regulations because only with regulations you can get a mature market. So the fact that we are registered in BVI does not mean that we are not going to apply to get licenses in different jurisdictions, right? So we know that, for example, South Korea, Canada, UK, and all, there are plenty of jurisdictions that now are setting up a more clear and long-term regulatory framework. So it's basically, you cannot choose easily one single place and say, okay, I will be regulated by that specific regulator. You have, if you want to serve customers across the world, especially in 2, 3, 4 years, 5 years from now, you have to apply for multiple licenses, have multiple licenses so that you can ensure that you can meet the regulatory requirements in the biggest jurisdictions in the world.
And of course, that you know, let's address the elephant in the room. The $18.5 million settlement signed by the New York Attorney General, where Bitfinex and Tether were under investigation. And do you see a return to the U.S. and being compliant? Where many say that Bitfinex and Tether got a slap on the wrist?
So I think that from a business perspective, right, in the US, there are plenty of exchanges and there are plenty of stable coins, right? So it's just from a few days ago that there was a news that the newly rebranded Libra is working with the bank in the US, right? So there is right. USDC, and then there is Paxos and so on. So from a pure business perspective for us, just I think that the world is big enough for everyone. And I think that we are thriving in markets like Asia and Europe and so on. So we don't have in this moment interest of re-entering the US market. I think that we are growing impressively without that. So there is for us is not a problem of pride or whatever, right? It's just that if we can grow in the places that we're more familiar in, for us is easier, is faster, and you know, competition is always welcome. And I think that the US in general is overcrowded, both from the exchange side. You have Gemini, Coinbase, Kraken, Bitstamp, and Bittrex, and so on. And is becoming a little bit crowded for the stablecoin side as well.
So I want to ask you about the backing. Originally, it was the statement from Tether that it was backed by the US dollar 1-to-1. What is it actually backed by?
It's backed by cash and cash equivalents and reserves. So Tether is 100% backed. So it means that we held cash equivalents like treasuries and things like that, and then we have a percentage in precious metals and this is important to understand that all this information has been previously shared with all the regulators we work with, right? So, of course, this is the first time we announced it publicly, but was really well known to regulators as well.
You got a lot of backlash, a lot of concerns that one characterized it as a glorified hedge fund, where the volatility of your portfolio holdings wouldn't necessarily be a stable security for $60 billion worth of market cap. How do you respond to that?
First of all, without having the people cannot really comment on that without having the perfect exact breakdown of all the different investments that have been made, right? So without knowing, for example, the average cost price of the precious metals reserves, or without having the breakdown of the commercial papers and so on, it is really, first of all, is unfair, you cannot claim that there is an issue when you don't have all the details. Of course, people, I think that when you become so big, you have to expect some sort of jealousy from the competition, and it's part of the game. I really it's competition and also general public that has to see that something is not right when it's actually it, right? So for us, I mean, we have taken more steps than anyone else. So we have competitors, for example, that do the same thing and keep their reserves in banks that might not be, banks in general might not need to keep certain amount of cash in the bank, or they can actually provide loans outside, right? So the fact that we have full control of our reserves and we are public about the allocation is something that is unmatched. And I understand, I mean, I understand the competition. I understand haters. Honestly, we don't care too much, right? So we did many steps. We are going to do additional steps. We are working towards an audit. We are discussing with more and more regulators. Believe it or not, well, I would say that it's pretty clear. The fact that we are so open is really bringing us a ton of business and is opening us many more doors. And all these new counterparties, of course, are questioning and are asking, right? And we never encounter a problem when we disclose our details.
So why not be a little bit more detailed? If people don't have the full picture, the full story, or the full details, why not share it?
Well, I think that a part of it is that, first of all, things can change rapidly, and so we roll over certain investments in also commercial paper keep getting rolled over and so on, right? So I think that not so we and also if you share too many details, you give you out your secret sauce, right? So there is a plenty of competitors that want to know how we do things, right? If we grew so much, and one important thing is we published this information, right? And yes, there was some backslash, but don't you think that if people were really scared and people with uh, people that were actually holding billions and billions and tens of billions of Tether would actually, if they were scared, would have actually bought Bitcoin or sold it for some other stable coin? That really didn't happen, because you can see that the peg, especially you see yesterday the market went down a lot. The Tether price was 1.007. Everyone was going into Tether. Why? Because people trust Tether. So, and the more we are public, the more we become solid, and people trust us more. You get more, of course, and you get more haters. I mean, it's part of the game.
Let's talk about that major crypto market meltdown. We talk on the day after. So a week ago, May 13th, total market cap stood at, what, $2.4 trillion. 1 week later, which is today, we're speaking today, 1 week later, it's now 1.6 trillion as we speak. That's $1 trillion lost for investors around the world. What do you think happened in the crypto markets? And what did you experience at Bitfinex? What did you see? I mean, we heard the moves into Tether, but in your view, what happened?
Well, first of all, I believe that the market went up a lot in the last 4 months, and a lot of capital, of course, entered in crypto. But truth to be said, also I believe that crypto was over leveraged. So you started getting all these futures, perpetual swaps, and so on, and with really high leverage on all the possible projects, like not just Bitcoin and Ethereum, that are pretty solid, well known, with strong fundamentals, but you get actually futures with 100x leverage on all the smallest coins, or, well, let's say the top 100 tokens are likely to have a future with from 50 to 100x leverage. And that's kind of risky, right? Because you get a lot of inflow due to all of retail, due to the news. We know that Tesla bought Bitcoin, Elon Musk owned Bitcoin personally, and then you get MicroStrategy. There is a big hype that is focused on Bitcoin, but this drags so many other projects that make the market really over leveraged, because people, instead of holding maybe the underlying, so the asset directly, use futures and leverage products in general. So that basically, so when the first time there are a series of news, right, you get Elon Musk that says that Bitcoin is using too much dirty electricity, and then you get potential China banning again Bitcoin news, and then if you sum up all these things, many of the retails and new people that enter in this market that were not used 2017, 2018, start to panic, and they start to selling, liquidation start to happen, and then you get basically a dog that eats its own tail, right? So the more liquidation happen, the more they push down the price, and then the more liquidation happen, and so on. And that is basically what we saw yesterday. With a over leveraged situation, you get a meltdown, as you well described, as we had yesterday.
Here's what's interesting. $7.5 billion worth of Bitcoin long positions were liquidated yesterday, May 19th. $3 billion in Huobi, a big China exchange. What were investor volumes like at Bitfinex? And I'm taking a look, but of course, you're the man who knows. But I'm seeing that it was only a fraction of the sell-off of Bitcoin at other exchanges. But what was your experience at Bitfinex?
So Bitfinex historically has been and is still the most liquid exchange for Bitcoin spot and margin market. So our traders. So although we offer 100x on leverage and we have perpetual swaps as well, our clientele, our user base is more institutional, right? So you don't get people that are longing Bitcoin with 50x. There are just a few of them, but with not really big positions. Bitfinex has positioned itself over the years as the place to be for professional traders, for high frequency traders, and so on. So most of our traders are maximum 5. That the big whales or the high frequency traders are really maximum 5x leverage. So that means that of course they have to have more collateral on the exchange, but also the risk of this meltdown in liquidations is much smaller. So we made an enormous volume. Yesterday was the biggest volume we made in all our history. We topped the 7.8 million in spot only, a billion, sorry, in spot only in that we made in December 2017. We were, you could see that actually on our books were quite hypnotic yesterday. You could see our order books, they were like dancing. And was so good to see. We were where there were at some point there was a wall of 1,000 Bitcoin at around 37,000 that was eaten through really quickly and kept replenished until the user, the traders bought 4,000 Bitcoin, and then that wall was completely wiped out and the price went down, right? So you could see all these dynamics in real time in the market. Was so beautiful to see. But yeah, we are really strong on spot and margin markets, where our top margin market, that is Bitcoin USD, has maximum 10x leverage. Well, yes, and we have as another offering our perpetual swaps that have 100x, but also the perpetual swaps are traded with maximum between 5 and 10x leverage from institutional professional traders. So I see that. Yeah, sorry, please.
No, I just wanted to understand that right. Our research showed that just around 103 million sold off long positions in Bitcoin from Bitfinex. What you're telling me is because predominantly you have mostly institutional and professional traders, that kind of sell-off was kept fractionally lower compared to the rest of the sell-off. Is this what I'm hearing?
That's correct, right? So if you have users that are leveraged 50x compared to users that are leveraged 5x, if the market moves 1%, you liquidate everyone that is basically leveraged 50x, right? So, but it has to move much more to liquidate someone that is leveraged 5x. And the thing is that if you use less leverage, you have time when the markets move to send more collateral, to add collateral to your position, and you have time to deposit Bitcoin, Ethereum, and Tether to support your position. So that's basically basic ABC risk management.
You know, and back to the breakdown of what actually backs USDT. It's very public. Avanti Financial Group CEO Caitlin Long argued that Tether's reserve actually mattered a lot during the sell-off, and you know, I'll just have you directly answer. It's really an opportunity here. But when Tether disclosed how it invests reserves, and it was a big negative surprise. This was in a tweet, not previously knowable at this level of detail. And why was it a risk? Because now risk managers at crypto hedge funds almost certainly will require haircuts on Tether, which means traders had to sell crypto to reduce their total risk exposure. How do you respond to that actually by revealing what's in your reserves and USDT, as people, took a look at their own exposure, felt that they had to reduce their total risk exposure because of the portfolio of assets that actually back USDT?
So I think that there are different ways we can respond to this, right? So the easiest thing is to see actual heads of hedge funds responding to her and with funny memes saying, do you are these risk managers that require a haircut in the room with us now, right? And again, did anyone see the peg of Tether moving in any way? I mean, don't you think that if everyone was so scared, we would have seen, first of all, you would see Bitcoin going through the roof, right? So if I have, on Binance, there are like $15 billion of Tether. Why, instead of having a sell-off, people that could have been scared should have bought Bitcoin with those tethers to avoid, or at least 10%, right, of to reduce the risk. You can buy Bitcoin or you can buy another stable coin. But really, if you see our competition didn't grow really much, and we kept growing after the news of the reserves, right? When we published the reserves breakdown, we were at 56 billion. Now we are 58 and a half. So risk manager said this is not the case. There are also people that were really skeptic that said, well, if you had such a good portfolio, why didn't you share it before? So we got a lot of positive news, but of course, in these situations, haters and people that are against make more noise than people that are supportive. But if you see the thread from Kathleen Long, I think that you can see many people actually commenting and showing how she's wrong. And also, isn't she doing something that can compete with Tether in Wyoming? So are we sure that there is not, some sort of personal interest in her attack? I don't know.
A lot of people, you know what, Paolo, to be candid, I mean, a lot of people are paying attention because of just the obtuseness of where Bitfinex has felt for a lot of people, including the New York Attorney General's office investigation. We're now past that, right? So here we are. What is the frustration that you have? Number one, what is the frustration that you have most with people's perception of what they think you are, and how would you like that clarified? I think there's just a lot, as you said, a lot of noise out there. What is the one that bugs you the most that you'd like to refute very candidly and very clearly?
So, I in the beginning, when I started this role, and especially when I become basically the public face of the companies, it was really bugging me a lot that people were attacking us so hard. And some people were actually right. Like, asking for more transparency is good. So I think that we have shown. We settled, we did an attestation, we published the reserve breakdown, right? So of course people want more and more, but it's not that we are doing nothing, and people should give us time to see if we are still committed and what we can do to improve that level of transparency. So the fact that we are in this situation now doesn't mean that we are now sitting in our chair looking at the numbers and not doing anything at all anymore. Right. So there is still a lot we can do, and we are discussing, we will take decisions, and we will show to the community. Now, I believe that we are on the perfect track of transparency. So attacking now, saying that, we could have done more. Yes, but look at where we were 6 months ago. Look at what we did. Look at people were saying you are going to be dead. You are going to jail. You are going bankrupt and so on. You are not backed, and yet we got regulators looking at our numbers. We got an attestation. We published the breakdown. So it's not nothing. It's a lot. It's more than anyone else, and we will continue to do that. So probably the frustration is, and again, but I was not experienced, right? I code 90% of my time. So public speaking and discussing and picking fights on Twitter is not really my role. I just like what I'm doing. I'm the type of person that just tend to react, and I want to be public myself, because I don't like people and my friends, people that work with me, my family, getting attacked and trashed when we are actually doing something really good for the ecosystem. We created the idea of Tether, that is, the first stablecoin. In 2014, Tether was created. No one knew what a stablecoin was. And today we have central banks talking about stablecoins. We have many competitors, and all came from an idea of people that get trashed now. And that's so bad. It's just, the misunderstanding is huge. And what I'm doing in the time I don't code and I don't manage my team is trying to pass this message, right? So we are good people. We have families. We work really hard. We basically don't sleep. We do everything that we can to support Bitcoin. So I really don't see why all these. Fine. You wanted more transparency. Here we go. You have it now. Now give us a little bit more time. We will figure out what else we can give to you. We will keep doing that, right? So that's basically the message that I think is important to share.
I guess the next step is an independent audit, and that's been tough to get for any stable coin, in fairness to the industry. Where are you on that?
We are actually working to find a company that would work with us to audit our books.
And when do you think we'll see that? Is that a this year thing? Is that something that potentially next year?
So I think that is likely that we will be able to get an audit by next year, right? So the auditors take a long time, also because we don't want to audit only 1 year, but also going back in time a little bit, right? So that's really what we are trying to do now.
Stablecoins has just exploded in growth. It has become the conduit for a lot of investors into DeFi. DeFi giving people the on-ramp to get yield when in the rest of the world that wasn't possible, and really creating this new metaverse, as it were, of opportunity. Where do you see stablecoins going in DeFi? How do you regard the future market in that space? And do you think the regulators are coming? And does that scare you?
So first of all, I would like to start from the regulators. I believe that regulators will definitely look at DeFi projects, right? They hold billions and billions and tens of billions, actually, of dollars under management in their projects. A simple thing to think about is you are providing, your project is basically an automated market maker, liquidity provisioning system. You can really think how a regulator can see that as, imagine to provide liquidity to the wrong set of persons, right? So regulators want to prevent anti-money laundering, want to prevent terrorism. So the fact that there is so much money in DeFi, and the fact that there is no any sort of KYC is likely to trigger at least a review of the debt sector of the industry, in my opinion. So, secondly, I think that Tether can have a really interesting opportunity there, because I know that we are working with certain projects that are interested to have a KYC version of liquidity pools. So we are working with them to provide KYC services, but also to provide potentially a fast route to acquire or to integrate with Tether. So that is really what we think that could be the future for DeFi and stablecoins.
The regulators, at least governments, are already stepping in, and not yet on U.S. Stablecoins, but right here in Asia, Thailand recently placed a ban on Thai-pegged stablecoins. Concerns there because it potentially contradicts efforts by governments and their own central bank-backed digital dollar. Do you think a fight is coming between stablecoins and government-backed, central bank-backed digital currencies?
Well, I think that there won't be a fight, right? There is space for everyone. I believe that the governments are catching up with the space, and so the easiest thing is trying to place a hold or a ban. But we have seen that many regulators that maybe ban something, they tend then to reanalyze the problem and maybe unban but regulate, right? So we want better regulations, clear regulations. That's the only way our our industry will continue to grow. So, and for people that say, well, when there will be an official euro stablecoin or dollar stablecoin and so on, there will not be any more the case for private issued stablecoins, not just Tether, right? There is Paxos, USDC, and many others. And I don't believe that is true. I believe that it's a little bit naive to think that the central bank, European bank, will issue on Ethereum, right? So the way I see stablecoins and government-backed stablecoins is that actually a stablecoin is a digital currency that moves on a blockchain. And before joining Bitfinex and Tether, I worked a lot in hedge funds and with the hedge funds. And as a developer, my role was actually trying to reconcile, at the end of the day, reconcile the numbers and of all the trading activity, all the settlements, all the cash movements, and so on, right? So that process was tedious, and that was basically one of the reasons why I looked at Bitcoin in the first place. I was looking at Bitcoin saying, okay, this technology is an open ledger, a public ledger. There cannot be errors, right? So cannot be confusion. So reconciliation is fast, is simple, and is transparent. So imagine if banks, instead of having their complex interbanking mechanism and so on, could use actually a ledger, a public blockchain with smart contracts. That would be beautiful. The cost of maintaining the entire infrastructure will drop down a lot, and the maintenance will be easier. And people can be developers that are actually maintaining that infrastructure can help building more tools, more frameworks on top of it, rather than trying to use rubber bands and trying to spend their time scratching their head and trying to find the problems that due to some human error, because most of the errors were actually human, at least in my work. So I believe that governments really want to use blockchain as a technology to bring bring freshness to the infrastructure of their national currencies, and then the rest. But they will have their private blockchain that is a permission blockchain. While we expect that our role as privately issued stablecoins will be servicing Ethereum, servicing Bitcoin, servicing EOS, and servicing Polkadot and Avalanche and so on, right? So you cannot expect the central bank of European bank to issue on Avalanche.
So two systems in place. And you mentioned the government and the need for regulatory clarity. In the US, a proposed legislation called Stable Act, which would require stablecoins like Tether to obtain full banking licenses. If they pass that, are you prepared to do something like that, or would you not participate in the US market altogether?
Well, we are actually not participating in the US market. At the same time, I see a lot of concerns from our colleagues from the other stablecoins in the Stable Act. So I think that, again, there is regulations are welcome, but there should be well thought regulations. So I think that banishing something for not having really well understood it is the wrong approach, right? You really want to analyze the problem well and then regulate it. And we have seen that with Bitcoin, leaving aside stablecoins. We have seen that with Bitcoin, right? Usually is ban, then, oh, that's really a nice thing. So, okay, let's try to support it. So I think that will happen the same way with stablecoins.
Well, Paolo, thank you so much for just spending this much time clarifying and being really frank about a lot of the hard questions. There's no doubt a lot of people still have questions. And are still seeking a little bit more clarity. But to your point, we wait. And so when you have that clarity, the market is waiting for it. Until then, the stablecoin market, you remain dominant in that space. And I welcome you back anytime, Paolo. This was a pleasure, and we really appreciate the opportunity to get on the record with you.
Thank you very much, Angie, for your time today and for the invite.
Absolutely. That was Paolo Ardoino, CTO of Bitfinex and Tether, joining us on this latest episode of Word on the Block. And I want to thank all of you for joining us on this episode. I'm Forkast.News Editor-in-Chief Angie Lau. Until the next time.